Hello and welcome. Today we're working on a bank reconciliation. I'm going to explain what a bank reconciliation is and give you an example. So let's get started. My name is Jeff. If you're new to the channel, from Finally Learn, and your likes and your comments and your subscriptions are really helpful. So if you have a question, put it in the comments below. Here's where we are in our financial accounting chapters. This is in chapter 7, cash and internal control. I've got videos on internal control. I've got videos on cash. I have a previous video on a bank reconciliation, but this is our second example. I have articles, videos, playlist. So let's get started with our bank reconciliation problem. Now let's assume that on June 30th, we need to do a bank reconciliation for Kaiser Company. And we have the following information. We have a book balance and we have a bank statement balance. Now, what is a bank reconciliation? Our books say we have $20,352, but our bank statement says $21,839. Now, one of the ways we want to have good controls on cash in our checking account is to make sure that we've written proper checks and that they clear the bank at the correct amount. We've recorded it at the correct amount. And so this is one way to find if there's theft or error or fraud or whatever. So what are deposits in transit? Well, we probably made a deposit at the end of June 30th and it just has not cleared the bank yet. The banks are really pretty quickly record any deposits, but there might be a day or two or three maybe clearing deposits. So these are deposits that the company, Kaiser, has made into the bank that have not shown up on the bank statement yet. Now, what are outstanding checks? Outstanding checks are checks that the Kaiser company has written and they've sent them out, they've mailed them out, and they just haven't cleared the bank yet. So we know that amount. Now, there's a note collected by the bank. So sometimes you might have a note and you say, hey, pay at this bank. You don't have to send it to us. You can just put it in this account. And so we will see this on the bank statement. So the note collected by the bank is on the bank statement, and we're now just finding out about it when we look at the bank statement. A couple more little things here. Sometimes the bank will say, hey, here's a debit memo. Well, this is probably for a bank fee. So let me change this to bank fee. And I'm going to say, hey, this became a debit memo. If it's a debit memo or debit memorandum, then it reduces your account. And then the next thing we have on the bank statement is there's interest earned, and so that's a credit memorandum, and we earned $30. The last thing we discover when we compare checks and compare what we did, we have a check we wrote for the Kaiser company. We wrote for utilities for $90. And somehow it got recorded in the books at $99. Not a big deal, but it's a $9 error, and how we handle it will show you how it works. All right, so a bank reconciliation. I'm doing this slightly different than maybe what your book does, but this is really kind of a better way. We're going to type in a column for bank and a column for books. So we're just doing it all in one format rather than having a separate, the top half is bank and the bottom half is book. So this will be completely fine. You're going to get the right answer. So let's just go in the order that we have here. Now what I did, I just sorted by the largest to smallest because this book balance could be at the bottom or whatever, just in a problem you might see. So let's see how this works. So the very first one is the book balance. And the book balance goes on the book balance side. I'm just going to point to it so I make less errors maybe. And then we have the bank balance. So on the bank statement, they say we have $21,000. All right. Now the next thing is deposits in transit. Deposits in transit are deposits that the company has made. The company knows about it, the bank doesn't know about it yet. It's not included in the bank statement. So we'll just say, and in fact, I'm going to copy that down. I don't have to type it in, deposits in transit, and that's going to be in the amount of $47.24. Now, is this going to be a positive increase to the bank, or is this going to be a decrease to the bank balance? Well, deposits are going to increase the bank balance, so we're going to put that in as a positive number. Now, one thing we want to do, let me go ahead and do this. I want to do a sum, so we can start checking our work, a sum of this entire column. And so right now we're at 26,563 and we're at 20,352. As we reconcile, these two columns will equal, and that's the point. We're going to call this the adjusted balance. So we got the bank balance and the book balance, and they should equal. All right, let's keep going. So now we're down to the outstanding checks. So outstanding checks. Now these are checks that the company has written that have not cleared the bank yet. So the company already knows about these checks. The bank has not received them. They don't know about those checks yet. So we're going to put that in as a negative number, right? Outstanding checks are going to reduce the balance of our bank account. So I just need to put a negative to make it a decrease. I've already formatted these for dollars. I did that before the video. That's not a problem. All right, the note collected by the bank. Now, how do we know about this? The note collected by the bank is on the bank statement, so the bank has already included it in the balance on the bank, and so we need to update our books. So the notes collected by the bank is going to be a positive 2,500 on the book side. So you see we're getting close. We're only $2 off, right? Now we have a couple of more things. We have three more things. The bank fee, is a debit memo. So the bank already knows about it. So bank fee, and that's going to decrease. So we'll make it a negative $41. The interest earned, the bank already knows about the interest, so this is interest. And this will be a positive $30. And we have an error down here. So we need to figure out what goes on. The error says we had a $90 check for utilities expense was recorded in the books at $99. So who made the error? Well, did the bank make the error or the company make the error? Well, the company made the error, and so therefore we need to correct that for $9. Now let's think about what we should have had. So a $90 check should be utilities expense and credit cash, and the amount should have been for $90. But we recorded it at 99. So this is 99 and 99. So we're just off. We made just a little small $9 error. Okay, so how do we fix that? We took out too much cash. We took out $99 of cash. We should have only taken out $90 of cash. So this $9 error is going to be the difference between the 90 and the 99. So $9 is going to increase our book balance. We took out too much. We got to put $9 back. And so now our adjusted balance is $22,850. So our adjusted balance for the bank is $22,850 and for the book is $22,850. Now, our books, if we don't make an adjusting entry, our books say $20,352. We need to include these items to get to $22,850. So we're going to have to make an entry and add about $24.98. If you do the math here, $24.98 is the increase in cash to make it go from $20,352 to $22,850. All right, so let's make the journal entry. We're going to put in cash. That's our increase in cash. And so what about a notes collected by the bank? Well, what's the journal entry going to be? We're going to debit cash and credit notes receivable. So I'm going to skip a line here. Let me check over here. I've done how many debits do I have? I have 3 debits and 3 credits. just to make sure I've used enough lines here. So notes receivable, and that's going to be the amount of $2,500. All right, what else do we have? We have a bank fee of 41. So we'll call this miscellaneous expense 41. We don't really have very many. We just have a bank fee once a month. So we don't typically use the account miscellaneous because it's not descriptive. Like, what is that? Well, that's just extra. But it's usually small enough where we probably don't have a separate bank fee expense. All right, interest earned. So interest earned is $30. And we would call this what? So it would be cash and interest revenue. So cash and interest revenue. We have an error of $9. Got $2,541, $30, $9 here. All right, we have, now think about what we have. We made this entry utilities expense. So here's what we're going to do. Instead of netting that out and making it $9, let's just clear out the utilities expense. The utilities expense was $99, and to get rid of it, it had a debit. To get rid of it, it takes a credit. So let's just do this. Utilities expense in the amount of $99. We're clearing that out of our books. But we need to set up the correct one for $90. So you could net those out and have a utilities expense just take out $9, but this might be easier to do. Don't net it. You might take out the wrong one and put in the correct one. That might be easier to understand. And then you'll see, hey, you could net out $9 if you want to. But here's what happens. We need to figure out the sum of these three numbers minus, I'll just do the minus 41 and then minus 90. And so we need to debit cash of $24.98. That will make the book balance go from $20,352 all the way up to $22,850. So these represent a difference of $24.98, a debit that increases cash. So this is how we do a bank reconciliation and how we do the journal entry, the adjusting entry to explain the difference in cash. Hey, I hope this video is helpful for you. I've got other videos in this chapter, other videos in financial accounting. Hey, thanks for watching. Please like, please subscribe, and please give a comment and a question in the comments below.